All right, so good morning, guys. Vic, you're welcome. Okay, so
Today's 21st.
what do you say?
Today's 21st.
Ah,
It's
I will
just
edit it.
sure.
I will edit it later.
Want me to
Okay,
bill you by month end?
you want to be me by month end?
Yes, no. What up,
We
friends?
started recording first. We talk about that one later. So, all right. So this is the daily charts on gold. So what we had projected for gold um in our last class, that was on Sunday, 19th January, did not play out as expected. No, it actually played out, but it did not first. The first thing it did was not to go and touch our 2708 by sell limits before it reached our TP, our projected TP of 2689. Okay, so that was not what happened. So the market opened. I think the first highest created was 2703, and then it fell down to 2680 and rejected from there. Okay, so by my calculation yesterday, excuse me. So according to my calculation from yesterday, I was expecting that the market, when it came up, when it picked us up at 2708 around 7 a.m. yesterday, I was expecting that it was going to reject, and it did reject, but it was unable to break back down to our expected TP of 2690. Okay, so what we saw the market do was it came down. It came down first. It came to 2702 and it started consolidating. Now, it's typical of Monday to consolidate. Monday is the first thing that's the first time frame that establishes the high and the low of the week, right? It sets the tone for the week. But then, usually Tuesday comes or Wednesday comes to take out the high and the low, to take out either the high or the low. Okay, but it doesn't happen always like that. There are exceptions to the rule. There are days, there are weeks when Monday sets the tone for the week. It sets both the high and low, and then usually, typically, when in the weeks when there is no high impact news or where there is low volatility in the market, so you could Monday could set the tone for the week, setting the high and the low, and then we have ranges within Monday throughout the whole week. And there are other times when usually Monday will set the high and the low, and then Tuesday or Wednesday will come to take out the high or take out the low, and then distribute accordingly. So, all right. So this was where we were picked. We were picked in yesterday. Yesterday in yesterday's trade, 270.5 thereabouts. That was where we entered. That was where the market started from. That was where the market picked us in rather, and then it ranged continuously till the end of the day. And when the market opens today, it first came down to this point, to the low of 2702. It could not break this low. It could not break this this support level. It couldn't break it down. It couldn't break it through rather, and then what? It distributed. So we have this bullish engulfing candle, which signifies a change in the trend. Right? We're expecting a sell. Why were we expecting a sell at the first instance? It was from, if you remember our analysis, which was from here. This was where we were expecting a sell from. There is a strong reversal. There is a strong resistance level here at 2721 region. It's better to indicate that with a zone. It's more of a zone than it is it's more of a zone than it is a single price point. Okay, so around this area Okay, there has been some rejections here, here, here. So we expected that gold will perform the same thing. It will do the same thing, and it did temporarily. Okay, but the first time it rejected down to the 2600s again, and the second time it rejected down deep into the 2600s, right? Let me reduce this. Okay, so the first time rejected down, down, down. Okay, so it's normal to expect that, oh, it's going to reject a bit, right? And I think I remember saying that I expect it to reject to maybe 2664, right? 2664, which is another strong liquidity zone. Around this is the point. This is 2664. Excuse me. All right. So yeah, 2664. Right. I expected it to reject because it's a strong liquidity zone. I think it will be seen more clearly on the 4-hour time frame. Okay. Okay, like you can see here. Okay. 2664. There are some continuations, so some support and resistance points here, right? 2664 was where I was expecting it to fall down to. But because the market is a place where probability plays out consistently. And the funny thing about the market is that just like in the real world, your probability is not static. It is changing depending on the actions the market pulls per time. In this case, in where our pivot area is the 1 hour. Okay, so this candle determines the destiny of the trend, determines the destiny of the market, at least for the next 24 to 72 hours. This particular candle, right? This bullish engulfing candle, it happened in the middle of the night while men slept. The enemy came to sow tares among wheat. This was the candle that took us out. Okay, but it's all right. That is why, as forex traders, we have to be professionals. We have to know when to, to where to put our stop loss, our take profit. You don't want to be too greedy and you don't want to be too fearful. Okay, so it is for reasons like this that even though your analysis is correct, you have to have risk management. Risk management, you can't underestimate risk management in forex trading. So this is a bullish engulfing candle, and it shows us taking this out by using this candle. This is about 150 pips long, from 2703 to 2719. That's the low and the high. That's about 160 pips. So this candle single-handedly took us out of a trade of almost 24 hours, and it's a great signifier of a change in the market trend. Okay, so we're expecting sell, and now we are going to buy. So if I was awake during this time when this happened, I will have entered buy immediately. Immediately this candle close, this bullish engulfing candle immediately close. I will just have entered buy, put my stop loss here. So I should have been hugged by about 80 pips by now. But the market is already reached, like it's course correcting now, and it's going to. I expect it that with 7 o'clock or 8 o'clock candle, it should come down a bit, maybe to our expected entry point, which is 2718. That's the next liquidity zone here. From where we will now take our buy. We'll put our stop loss somewhere here. So that means we'll be risking about 150 pips. That means we have to risk low. That's if the market should come here. If it should come here this morning. So our expected entry point is at 2718. And our take profit, where is our take profit going to be? So we do that by checking again, where is the next correct liquidity point in the market? The next correct liquidity point is where? Is where exactly? Okay, so we check it on the daily time frame first of all. The weekly will not show you very well because you don't see a lot of candles on the weekly. That's a major reason anyway. So this we are getting back close to the high, close to the all-time high, right? So I would expect that with what gold is printing for us currently, I would expect that gold should beat the all-time high within the next few weeks or days actually. So we could beat the all-time high within the next few days. All right. Give me a minute. All right. So where is this? What did I do? Okay. So let me mark. The next liquidity point is somewhere in this region. I think I should mark it with a rectangle. It's going to be a very small one. So I expect it to be in this region. That's the region between 2743 and 2749. Okay? So it will cover this place a little bit. Yep. All right. So this is what I'm expecting to happen in the market. Of course, like I always say, it's always good to mark your liquidity points. Okay. This is going to be blue. Okay. Okay. So the next point where we expect price action to maybe reject a little bit is at 2749. 274 between 2743 and 2749. Okay, that's why we expect another kind of market retracement. So this is just we marking our liquidity points. Remember I said that on our 1 hour time frame, the bullish engulfing candle has cancelled out because it swallowed up all these highs, right? It swallowed them all up, right? And then why do I think the market is going to come down a bit? Of course, because we've had this movement. It has taken out this high, the highs we've always had here. It has taken it out. That's the high of 2726 or 2724, right? It has taken it out. Excuse me. So the high has been taken out for us, and since the high has been taken out, right? Of course, it will with this rejection candle we have here. I don't know if to call it a rejection candle here, but it looks like, typically when the market sets a tone like this, when it has been buying and then you see this candle, you just know that okay, somehow it's likely to reject. Also, what is the time? The Asian session has just ended, so you expect that there'll be a little reset for the London session and the New York session. Okay, so this is what we are seeing playing out now, correct? Currently, so I expect the market to come down to this region, maybe to the high that we had here, where we had our stop loss before, 2717.41. It might not reach here, it might reach maybe 2718 or so, right? Before it now keeps buying. But the bottom and short of what I'm just saying is that we already have a change in trend. Okay? This bullish engulfing signifies a change in trend. So I expect the market to just come down a little and then start going up from here. So if our entry point, if our buy limit is at 2718, which we can actually change, depending on how the market behaves or performs. So we can say, okay, let's put we can shift it. We can shift our buy limits depending on what I say. But temporarily now, I will say you place your buy limit at 2718 and your stop loss at what? 2703. I know that's a lot. That's about 150 pips risk. But let me see if there is. I don't like going anywhere below the 1 hour time frame, because I think the lower time frames are usually used for they use it to manipulate, right? So I just like sticking with my 1 hour time frame. And the beautiful thing about this is just that if you put your your entry point here, it is very, very unlikely, very, very unlikely that the market will come down to this point after this bullish engulfing candle. It is very, very unlikely. So I can say this is almost let me say 90%, about 90% safe trade. Actually, a 90% probability of your trades being safe if you take this kind of risk. If you enter at 2718, okay. Or if you don't want to go down to 2703, you might just say 2705. But what's the difference? Only 20 pips. If that is okay with you, no wala. But I like to just play as safe as possible to earn as big as possible. So from 2718, let me use, so I won't just use my mouse to say that. Let me just mark it. So 2718 is the entry point. Okay. So this is what I'm talking about. 2718. And our take profit, our first take profit should be somewhere in this region. Let's say 2745. Okay. So that's a ratio of a risk reward of 1.85. Almost 2 pips. Almost 2. Almost 2 RR. It's not too bad. Not too bad. But the beautiful thing is that if you enter at the correct price, you really don't have to worry yourself about your risk. If the reward is, if your entry is done, you have a nice entry. Okay. And the funny thing also is that the market could actually fall below 2718. It could fall as low as maybe 2713. Who knows? Right? We are not perfect. Only God knows what's gonna happen. But okay, I just think the safe zone is just to put our buy limit at 2718. Okay, and then expect a TP at 2745. That's how many pips? That's about 270 pips, if I'm correct. About 270 pips profit. So that could happen today, tomorrow, who knows? So that's just my analysis. And of course, with what is happening currently, that's if the market does not reject from here, from 2749 region, and I expect it to take out the all-time high. But of course, the market will make several stops at some point. It will make several, it will get to several places, reject at different places, or continue from different places. So this 2771, if it should break above, if it eventually breaks above 2749, I will expect the market to get to what? 2771, right? Why? Because of an imbalance field here. An imbalance that is meant to be filled at 27, let's say 2769, thereabouts. Okay. So I expect to get to 2769. But of course, that's going to take some time, maybe 24 hours after it has taken this place, or more, or less anyway. So that's just what my analysis is telling me today. And I would like to know if you have any questions. Do you have any questions before we close the class for today? Okay, I assume that there is no question. Okay, let me just quickly share the screen of my trading view to I say trading view of my metaphor. What's happening? A minute, please. Okay. Okay, so this is my metaphor. So just translating what we've seen on the trading view, bringing it down here. Because you can see on the trading view, I'm bringing it down here. Okay, so with our what we have here with our EMAs now. So what I'm saying is that I expect gold to come as low as this place here, or it should fall here. Okay, so what I'll be targeting primarily will be I think it will be here actually. This 27. No, I won't. Let me see. If the market falls as what I expect to happen here, if it should fall from here, right? If it falls from here, I expect it to come and meet this band, this 25 EMA. I expect it to come down here to 25 EMA. That's what I expect to happen. It comes to 25 EMA, and then from here to buy up. That's what I will expect. Okay. So let me. But the funny thing about the EMA is that it's not static. It keeps moving, right? It moves, and I tell you that it moves. It moves according to what? The market moves according to the next liquidity point. Our EMA moves according to the next liquidity points. All right, so that's it, bros and sis. Any questions? Do we have any questions?
No, sir. No, sir.
All right. Okay. So I assume that what I said, like what I have just spoken, is well understood then. You all understand what I said, right?
Yes, sir.
Okay, thank you.
Yes.
Have a nice day, everybody. All right, thank you and have a nice day.